Okay, good evening, everybody. It is July 31st, the last day of the month, 2022. Hope everybody had a fantastic weekend, a very restful weekend, because it is going to be a very, very busy week on Wall Street. So obviously, tomorrow is August 1st, the beginning of the month, and we have a lot of stuff to talk about. It's going to be an action-packed week on Wall Street. Obviously, as we remember, the first business day of every single month, we will be hearing from the Institute for Supply Management. So obviously on the stream, we talk about the PMI numbers all the time, in which case we will be getting the Purchasing Managers Index for July. Economists across the board have a consensus of about a 52.2 reading. That is slightly lower than June's 53 reading, which is the lowest in nearly 2 years. Now, we're going to go into a deep dive on the ISM manufacturing numbers, or the PMIs, to sort of talk about why it's relevant, why it's important, and why it's not advantageous to look at the number at face value to say, okay, if it's above 50, that means the manufacturing sector of the economy is growing, and if it's below 50, that means it's contracting. I think there's a lot more to that story that needs to be told, in which case we will talk about that tonight on the stream. So everybody, I just want to give a little bit of a warning. It may rain tonight. The clouds are coming overhead. It's very, very humid in Midtown Manhattan. But on that note, everybody, we will have a quick check at futures. Okay, so if we look at the S&P 500 E-mini futures contract, ticker symbol ES, we're down about 15 points. I would call that flat. If we look at ticker symbol YM, which is the futures ticker symbol for the Dow Jones Industrial Average, or the E-mini Dow Jones, we're down about 115 points. And last but not least, if we look at the NQs, which is the NASDAQ 100 E-mini futures contract, we are also down about 52 points. So I think this is probably because we are expecting to hear not only from the Institute of Supply Management tomorrow, but we are also going to be having a massive, massive week on Wall Street when it relates to corporate earnings. So on Monday, we are hearing from Arista Networks. We will be hearing from Simon Property Group, which is a company we talk about oftentimes on the stream. We will be hearing from Global Payments, but Tuesday, August 2nd, is really the day that we need to pay attention to, because a lot of the stocks that we talk about each and every night on the stream are reporting earnings, most notably AMD, or Advanced Micro Devices. We have Caterpillar, ticker symbol CAT, reporting. We also have PayPal Holdings, Occidental Petroleum, Marathon Petroleum, Marriott International, SolarEdge Technologies, Uber, and Starbucks will all be up reporting on Tuesday. So I'm going to put away my laptop here. It's going to be an action-packed stream. Once again, I hope everybody had a fantastic weekend, a very restful weekend, because it is going to be a busy, busy week. And I think it's a good week to start off on the right foot, because it's a brand new month. Okay, the month is coming to a head. July is now in the rearview mirror, and it is time to focus, get geared in, and really dial in for August to make the most of it. So let me put the laptop away, everybody. I am in Central Park, so we are starting the stream off from 59th Street. And I guess we'll say hello to everybody in the chat. So let's do that first. So greetings, friends. Welcome. Good evening. Hopefully you all had a good weekend. Chris is here. Says, hey, Tom. Hey, Chris. Good to see you. My good friend Robert is here. Says, hey, Tom and friends. Hey, Robert. Good to see you. Guy Tejada says, hey there. Good to see you, Tejada. Sally says, hey, Tom. Welcome. Dante Rose, the one and only ABX girl from the Bronx. Good to see you, the ABX girl. Hopefully your weekend went well. Fredix is here. Says, sweet. Mike C. Says, hey, I'm at the start for a change. Yeah, Mike. Good to see you, man. Thank you for joining. Thank you for joining, everybody. Beautiful night in Manhattan. Beautiful day in Manhattan, by the way. Beautiful, beautiful day. The only thing, everybody, it may start to rain, which is definitely not good, so we may have to end the stream a little bit early, but we do have a lot to cover. We do have a lot to cover. We are going to be talking about the Federal Reserve. We're going to be talking about a lot of economic data we are going to get. And it's going to be a big week for corporate earnings too. Big week. Hey, my best friend Michelle McGraw is here. Good to see you, Michelle. Michelle is a fantastic moderator on the stream. De Silva is here, says, hey, Tom, good to see you. Lila says, hey, Tom, and everybody, welcome. The one and only Vinny Castellano is joining us from Staten Island. Please send my regards to Maria Castellano. Good to see you, Vinny. Corey is here, says, good evening, Tom. Welcome, Corey. I see the one and only James says, hello, Tom. Welcome, James. Sebastian, good to see you. Michelle McGraw, long time no see. Tucson is here, says, good evening from Tucson. Sabrina Fair says, good evening, Wall Street Walker groupies. Love that one. So I guess I want to start off with a little bit of an interesting fact. Check this out, everybody, in relation to the housing market, because we actually haven't talked about the housing market in quite some time on the stream. But the drop in new single-family home sales in June from the prior month hit the lowest level since April 2020, which is 8.1%. So 8.1% decline in single-family home sales. Now, I think we could probably chalk this up to obvious reasons, right? I think we could probably chalk this up to obvious reasons. What did the Federal Reserve do just last week at the FOMC meeting? While we're pondering that, take a look at the beautiful Billionaires Row here, live streaming from Central Park South. We are actually looking at the 157 building. This building actually shares an address with the one and only Park Hyatt Hotel. So absolutely beautiful, absolutely gorgeous tonight. But if we understand affordability in terms of the housing market, if the Federal Reserve is steadfast on raising interest rates, and I do also want to talk about one of the Fed presidents, Neil Kashkari, which we heard from, which actually posted a little bit of a different demeanor than Fed Chairman Jerome Powell is sort of signaling to the market. But long story short, on Wednesday, we did get a 75 basis point rate hike. Okay, so we did get a 75 basis point rate hike, in which case the Fed funds rate is now to what Fed Chairman Jerome Powell has been signaling for a while. But if we take a look at some of the verbiage that came out of that FOMC meeting or the conclusion of it, we'll see that Fed Chairman Jerome Powell is actually a little bit dovish, communicating to the market that he may not need to raise interest rates. However, Neil Kashkari was on an interview. I forgot to program it into the Nightbot, but it will be in the stream review, where he was saying that the CPI numbers are very, very troubling, and that we are actually seeing data that inflation is now seeping into other sectors of the economy. Although we know that some of the commodities are coming down here, if we look at just the cost of living in relation to rents, in relation to housing, you know, that makes up a very, very large portion of the CPI. So it's important to stay cognizant of that, and maybe there's some infighting amongst the Fed presidents. Miss Brown Eyes, thank you so much for the $4 donation. You are very, very kind. Community Counter says, good evening, Tom. Welcome, good to see you. Sabrina, welcome. James, good to see you. S says, hey, Tom, hope all is well. Hey, the one and only Joe C is here. Says, Tom, good to see you. Always a pleasure. Tone Rick says, good evening, Tom, from Long Island. Love Long Island. You know, I was actually just in Long Beach not too long ago. Love it. NMB045 says, happy Sunday night, Tom. Hey, NMB045. Hopefully you're enjoying the views here from Central Park South. The only thing, everybody, if you notice on the stream, it's crazy amount of cloud cover here. I think it's supposed to downpour rain at about 1 o'clock in the morning, but usually the weather forecasts are sometimes inaccurate, so if it starts to downpour a little bit sooner, we'll have to cut the stream short. But anyway, going back to the housing data there, I think it's pretty obvious why we're seeing a little bit timid home sales data come out. Right, many economists on Wall Street and many analysts would even use the terminology housing sales or existing home sales are falling off a cliff here. And that's just because the cost of capital is increasing, right? So if we think about this time last year, what would it cost you to take out a mortgage? You know, it would cost you about 3%. You know, if you had really good credit and you were really lucky, many people were lucky enough to get mortgages sub 3%. right? But now I think the average rate on a 30-year fixed rate mortgage is right around, I don't know, I'd say maybe 5.25%, 5.5%. So obviously that's a 100% increase, right? So it's now 100% more expensive to buy a home than it was this time last year. And one of the things that I'm a little bit concerned about is the following. Okay, one of the things I'm a little bit concerned about is the following. As we're walking down 59th Street here, what we're seeing right now is housing prices are not yet coming down. Now, I'm not saying that they won't come down. I actually hope that they do come down for reasons that we talked about almost ad nauseum on the stream. But if people can't afford to buy, what does that mean they have to do? That means people have to rent, right? Obviously. So I think this is why we've been seeing now the irrational exuberance spill over from the housing market into the rental market, because if people are priced out of buying a home, and just to give you guys some context here, we are overlooking the Trump International Hotel and Tower. We are overlooking 15 Central Park West and the Deutsche Bank Towers. But if people are priced out of buying a home, everybody is going to be crowding the rental market, and as rents go up via more demand, this could be a perpetual loop cycle until something breaks. Right, until we have what's called demand destruction, which I think we're getting there. I think we may be getting there towards the demand destruction. But you know, what do you guys think? Because if we look at that 10-year U.S. Treasury yield, one of the interesting things that we'll notice is that weeks ago, I'd say maybe about a month ago, we were actually above 3%. The yield on that 10-year U.S. Treasury has actually come down a bit. It's actually come down. Hey, Anna is here. Says happy Sunday. Good to see you, Anna. Always a pleasure. Solid Nate, what's up? Solid Nate, long time no see. Always a pleasure to have you on the stream, Solid Nate. Good to see you. Hey, my friend Sunshine After Rain. Thank you for being such a great moderator on the channel, Sunshine After Rain. Always a pleasure. Thank you for your help. Lisa says landlords can take advantage. Yeah, that's a big one too. You know, I think in general, landlords are making up for lost rent during the pandemic, perpetuating the negative sentiment in the market. So I think that's a really good point. Hey, parking full time says, hey Tom, I'm almost finished selling a house right now. The housing market has definitely softened over the past month, at least here in South Carolina. Hey, so parking full time, I'd love a little bit more context there. So were you selling your personal house or were you selling a client's house? And if so, if you want to disclose that information to the chat, how long was that home sitting on the market, right? Because I actually have a story, and it's a little bit of anecdotal data, but I think it's important sometimes to throw in the anecdotes there. You know, long story short, one of my good friends is also trying to sell his home. And he was texting me in a panic. He's like, oh my God, my house isn't selling. I was like, all right, well, how long has it been on the market? He's like, oh, 2 weeks. I was like, okay, you're just crazy. Because parking full time, to your point, I think that a lot of first-time home buyers and a lot of first-time home sellers have been conditioned by this irrational, exuberant market due to the COVID pandemic. Now, if we look at historical data on a historical basis, it usually takes about 90 to 180 days for a home to be sold once it's listed on the market. That's like normal. Right, but during the pandemic, we saw homes going on the market within a week. They were getting multiple offers, many offers over asking price, with all the contingencies waived, right? So waiving inspections, waiving all of this stuff that definitely you're not supposed to do. So I think this short period that we've had, and obviously humans are creatures of habit, we've been conditioned to think that if you put your house on the market and it doesn't get 50 offers within a week, you're never going to sell your house, right? So maybe we've just returned to this paradigm where now we've turned to some sort of normalcy. Okay, so if a house sits on the market for the traditional 90 to 180 days, people think that the housing market is going to crash, when in actuality, we're just doing a sort of a mean reversion trade here, and things are getting back to normal. But we'd love some more context there. Robert says, hey Tom, nice night in New York City. Yes, thank you, Robert, appreciate it. We are at the Columbus Circle neighborhood of New York City on the corner of Broadway, one of my favorite locations in the entire city. Mike C says, hey Tom, it might take 90 days to sell, but the fear is what if the market collapses? Parking full time says, Tom, it was my personal house, went on the market in early June, finally closed this week. Yeah, so so that's interesting. So parking full time in early June, closed this week. So it actually sold faster than normal, actually. Well, congratulations. Hopefully you got a good purchase price there. Parking full time says, Tom, I got an offer last month. Not sure I would get that much now. Looks like you sold at the right time, my friend. Looks like you sold at the right time. Well, congratulations on your sale. Wendy England says, Tom, there is still not a lot of inventory in the Vancouver area. Yeah, I mean, until we can see a lot of inventory come back on the market, you know, I think what'll happen is, I don't think you're gonna see a housing crash. I really don't. You know, you just may see prices not go up at the astronomical rate it's historically gone up over the past year. Hey, TMB says, would love to see more homes in troubled areas being picked up cheap and revitalized for depressed areas, says TMB. You know, I would too. Another thing that I would like to see, TMB, to sort of piggyback off your point there, is we've been seeing, obviously we've been talking about on the channel, we've been seeing this exodus from big cities to more suburbia, but it doesn't necessarily mean people are leaving cities to not live there. This is what I mean. We're seeing more of a hybrid type work environment. Ooh, this is a Tesla taxi. Check this out. You know, I've yet to be in one. If we see one with a white light, we may have to just jump in there. So now that we are in this hybrid work environment phase, what I think would be very advantageous to potentially solve a massive crisis that we have, not only in New York, by the way, in Miami, in pretty much any major metropolitan area, is that if we can take some of these vacant office units or office buildings, where people are only going to the office on Tuesdays anyway, and convert these units into housing, right? Not ultra luxury, but you know, maybe the government gives some incentivization or some tax credits to build and develop these office buildings into, I wouldn't say affordable housing units, but you know, regular middle-class housing units. I think that would help to add more supply into the market. But that's just one proposed solution I have. And I think somebody else in the stream, he may have actually been a real estate developer, is proposing that same solution too. Tony is here, says, I hear a lot of people talking about the lack of affordable house. For people, we need more cheap homes, says Tony. Yeah, I agree. I agree with that. Vinny Castellano says, hey Tom, Maria wants to know if you can plan a walk through Little Italy one night, and how about through the Lower East Side? Yeah, so Vinny, we'll probably do that this week actually. You know, if the rain holds off, Vinny, we may do that tonight, but definitely if Maria wants us to walk through Little Italy, I'll definitely make it on the list. You know, we may actually be able to do it tonight if the rain holds out, but Anna says, TMB, agree, more of these areas need to be gentrified. Canal says, hey, I'm from Brazil. I discovered your live yesterday. Do you talk about investments in all your lives? Pretty much all of them. Pretty much all of them. We usually do like a market to look ahead stream on Sundays, but it's usually a little bit of a mix. But thank you for joining. Appreciate it. So everybody, we are standing right outside of the Deutsche Bank Towers, and right now we are overlooking, I would say, the two most newest icons, or the staples, of the New York City skyline on Billionaires Row. So the tallest building, you're actually looking at Central Park Tower, which is my personal favorite. And right to the left of it, with the gold top, that is 220 Central Park South. Now, Ken Griffin, which is the owner and founder of Citadel Securities, who founded the company very early on in his days at Harvard Business School, occupies, I believe, one of the units at the top floor. Not sure how much time he'll be spending there now that they're moving Citadel Securities down to Miami, Florida. But beautiful view here. Hey, the Papa Smurf says, hello, my friend Tom. I hope you are enjoying the walk to New York City. Rain coming soon. Salute to the room. Tom is a genius. Hey, Papa Smurf, appreciate you. Appreciate all of the men and women in the FDNY too. Big shout out to all of our New York City firefighters. Appreciate you guys. Appreciate everything you do. Solid Nate says Tom's going to be on Billionaires Row someday. Probably not. Maybe. That'd be great. Just kidding around. Lisa says, the newest trend I see is where I live, cargo containers, boxcars made into homes. There's a community of rentals. Wow. You know, well, I've been talking to some real estate buddies, and supposedly the investments with the biggest cap rates for anybody who's a real estate junkie here actually tends to be in the mobile home or the mobile home parks. Has anybody else have experience in mobile home park investing? So I personally don't, but that's something I'm looking into as we are running into an affordability crisis here. But I'm just wondering if anybody in the group has also heard anything about that. Hey, my friend David Randall is here. Says, hello, my friend. Yes, homeless housing is a big problem. Agreed. Alex says, hey, Tom. Good to see you, Alex. Adam 1053 says, hello. Greetings from Poland. Love Poland. Good to see all of our Polish viewers. Good to see you. Random YouTube channel says, greetings from Denmark. Would love to go to the New York again. Last time it was in 2005. Well, please, please, please come back and visit us soon. You know, the city is open for business, and we'd love to have all of our foreign friends come to visit. Tony says, I love to get a few mobile homes to rent out. Yeah, so Tony, this is going to be something I'm going to have to do a little bit more research on, and I want to bring it to the group and talk about it. Unfortunately, right now, I don't have enough expertise to be able to speak to it, but I do have somebody in the industry that is making significant investments in trailer parks, mobile home parks, but not the rundown ones that you may think about. These are very interesting emerging communities that we're seeing pop up all across the United States. So this is something that I'm going to be bringing to the group and some data here. Lisa says, yes, I have double and single wides that I rent. Lisa, very nice. So how are the, I'm sure they cash flow quite well. The ABX girl is here. Let's see what the ABX girl says. Hold on. I'm getting a lot of comments. I want to make sure I read them all. So we are standing outside of the Mandarin Oriental Hotel, which is another, I believe, 5-star hotel here. Hey, Myra King says, hello, Tom from Maryland. Love Maryland. Good to see you. Good evening. Good afternoon. Hey, The Real Boogeyman says, I am here tomorrow, Tom. Awesome. Welcome to New York. Hey, the Papa Smurf says, appreciate the love, Tom. I love my job. Public service is amazing. Love that. James says, mobile homes are good investments. You could charge cheap rents and always get a tenant. The ABX girl says, you own the mobile home but not the land. That's becoming unaffordable to mobile home families. Yes, so ABX girl, that's actually what I wanted to touch on. So again, ABX girl probably knows a little bit more about this than I do. I'm sort of delving into this. But supposedly, I think the vast majority of mobile home parks, the landlord owns the land. And again, you know, I'm just dipping my feet into this. But supposedly the landlord owns the land and they lease the land to the people who may own the mobile homes, or you could do both. You could lease the land or rent the land or also rent the mobile home park or the trailer. But we'll look into that. But guys, tonight we will be doing the classic Sunday edition of the Markets a Look Ahead stream. And it is going to be a very, very busy week on Wall Street. Okay, everything from economic data to corporate earnings. We are also going to hear from the Institute for Supply Management. So on Monday, obviously the first business day of the month, so just be cognizant of that. Every single month, on the first business day of the month, we hear from the Institute for Supply Management. They release their Manufacturing Purchasers Managers Index for July, so the PMI numbers, if you want to think about that. So the first business day of every month, is when we get the readings of the PMI numbers. And I think this is arguably one of the most important pieces of economic data for anybody who's an investor, who's a trader, or who just wants to get a better gauge on the overall health of the manufacturing sector of the US economy. And I say that for this reason alone. If you think about the percentage of GDP, or gross domestic product, that the manufacturing sector makes up, it's about 20%. Okay, it's about 20%. And every Monday, well, the first business day of the month, we dedicate the stream to doing a deep dive into the PMI numbers. So one of the reasons why I really like to take a look at it is because you get to see all the respondents. Okay, so there's a survey, the survey that gets sent out to a lot of the manufacturing, large manufacturers in the United States, and they ask them key questions and forecasts about future orders, about sentiment from their customers, inventories. So I think besides the number alone, right? So if we want to review what the numbers mean, generally speaking, if you get a reading above 50, so if you get a PMI reading above 50, that signals growth in the manufacturing sector of the US economy. However, a reading below 50 signals contraction. So I'm going to go into tonight, tell you guys why that's a little bit misleading and why that there's more to the story. So if we think about the readings from last month, I believe the June reading was about 53. So if you took that at face value and you said the PMI numbers that came out or released in June was 53, you're like, great, that's above 50. That means the manufacturing sector in the US economy is growing and all is rosy, all is well and good. Well, it's actually not the case, and I'll tell you why. Because if you look, and this is why I always like to utilize Microsoft Excel, if you can chart the historical readings or the historical data of the PMI numbers, you can actually chart the curve or the trajectory, right? So we've been doing these streams for over a year now, and 6 months ago the PMI reading was 58, then it was 57, then it was 56. Last month it was 53. Economists for this month's reading are expecting a 52 reading. So we're seeing steep deceleration in the manufacturing sector of the US economy, and that is no surprise why we have now seen not one but 2 consecutive quarters of negative GDP growth or negative GDP prints. And I think this is why it's critical, absolutely crucial, if you're a portfolio manager out there, if you're managing a family officer, maybe if you're managing your own money. It's important to focus on the manufacturing sector because these numbers make up about 20% of the US economy. So generally speaking, if you see a trajectory to the upside in the manufacturing sector, well, the S&P 500 is probably going to be up in the next 12 months. But if you see steep deceleration and even a negative print in the PMIs, well, that's probably going to be mean negative returns for the stock market, and that's what we've seen exactly. James says Florida is full of those mobile home parks. Yeah, so Florida and the Carolinas too. Florida and the Carolinas as well. You're right, James. Hey, Sabrina Fair, good to see you. Yeah, so Sabrina Fair, we are standing outside of, I think the official address is 1 Central Park West. And this is the Trump International Hotel and Tower. So one side is the hotel and the other side is the residences, but I also think they have a program where you could actually acquire hotel units, and while you're not using them, you could actually rent them out to guests, which is pretty interesting. I think the Essex House does something quite similar. Robert says, why isn't there much manufacturing anymore? Well, I think all industrial nations, as they go through their main industrial revolution, usually manufacturing will get outsourced to other countries where labor is cheaper. But it still makes up 20% of GDP, which I think is pretty significant. Hey, Dan Zhang is here. Says, hey, Tom, good to see you. Dan, always a pleasure to see you. Hopefully you're well. Hey, Chris Beeman is here. Good to see you, Chris. Says there's manufactured home parks here in Phoenix, Arizona. Ah, very nice. And there's amenities for people over the age of 55. Okay. Interesting. Yeah, I got to look into it. Sunshine After Rain says RV parks are great investments. Yeah, so Sunshine After Rain, one of my friends is really, well, over the past couple years has made a really big push, and the majority of his real estate investments now are actually mobile home parks, which I'm not too familiar. I've more had my focus on SFR, or single family real estate, as well as multifamily real estate. But supposedly, it is very, very lucrative to delve into that space. Hey, Eve Long is here. Says, hey, good to see you, Eve Long. Welcome. The ABX girl says, Tom, North Carolina areas near Charlotte and Raleigh is losing their mobile home parks for starter homes starting at about $600,000. Oh my God. Yeah, that sounds a little bit too irrational. That's insane. Hey, Christina says, hey, Tom, pray the Saudi does not join. This American dollar will be worthless. All right, I will pray for that. Wendy England says, they seem to put mobile parks in the path of tornadoes, hurricanes, and floods. Yeah, maybe there's a little bit of a coincidence there. Fabricio, good to see you. Welcome. Hope you're doing well. You know, for over the past couple of days, we've been coming up here near 59th Street. This is one of my favorite locations, one of my favorite areas. I actually went to college not too far away from here at John Jay, as you guys already know. But also tomorrow, everybody, we will be hearing from the Census Bureau. They will report construction spending statistics for June, and the consensus estimate is for about a 0.2% monthly rise in total construction outlays to a seasonally adjusted annual rate of about $1.78 trillion. So I think we could also use this as a forward-looking economic indicator as well. You know, I think the biggest forward-looking indicator for the housing market, in my view, is housing starts, right? So housing starts last month fell off a cliff, down about 14% year over year. So that is definitely a trend and a trajectory that we need to watch. Hey, Gregory is here. Says hello all. Welcome, Gregory. Good to see you, my friend. TMB says mobile homes are not tied to a foundation. That's why they are vulnerable in weather events. From JP says, I listen in English in your channel. Thank you so much. Appreciate it. James says new homes around here are in the 400K to 600K price. Outrageous. Yeah, so what do you guys think about, so I was having a conversation with my buddy, and we'll get onto the normal topics of the stream, but I think it's important to talk about the housing market every once in a while. So I was talking to one of my friends, and obviously I told you the story already that he tried to sell his house. He put his house on the market for 2 weeks. Well, he flips out, he sends me a text, he's like, hey man, my house isn't selling. I think I should have put the house on the market 2 or 3 months ago. I think I'm never going to sell my home. So I text him back and I'm like, well, how long has it been on the market? He's like, oh, it's been on for 2 weeks, right? So I told you guys that story already, and that I think that the pandemic in general has now ingrained into the vast majority of Americans unrealistic expectations for home sales time frames and even prices. Because if you look back throughout history, the average time it takes for a home when they get put on the market, when it gets sold, is about 90 to 180 days. And nowadays, many people think, oh, if I put my house in the market and it doesn't sell within 180 days or at 180-day mark, that means the housing market must be pretty crummy. But it's actually quite the contrary, because it's interesting, because I've been looking for homes. I'm always looking for deals. And one of the things, I think we'll try to get away from the music for a minute. Something that I noticed over the past 2 years is that a lot of the listings, a lot of these sellers don't even take the time to do basic things on their listing, right? Like take pictures of the house when there isn't garbage thrown all over the place. I see a lot of listings on Zillow where they have a picture of their cat or their dog on the bed, and the dishes are still in the sink. So like little things that are obvious for anybody who's maybe not incompetent in real estate to say, okay, if you really want to sell your house, you got to try to make an effort, right? But I think it's been so weird during the pandemic that it's actually programmed people to have horrible behaviors and expectations in relation to the housing market. So here's what I think is going to happen. And I've said this before, but I think we're going to have a normal reversion to the mean. But a normal reversion to the mean is going to hurt a lot of people. So to me, a reversion to the mean means you're going to have nice curb appeal on your home. You're going to have to either hire a professional photographer to take photos of your home, or you just do it yourself, but make sure you put the cat away, you clean the dishes, you vacuum and you sweep the floor. You got to actually try to put effort into it, right? Because during the pandemic, if you wanted to sell a home, there was no effort at all. You would just throw the listing up, and in a couple days, you were getting hammered with 2-3 offers, even over ask. So I think in general, in conclusion, and you guys type in the chat, say, hey Tom, if you think I'm wrong, let me know. I want to know what you guys think in the chat. I think it's just going to be a reversion back to the mean, but a reversion back to the mean is extremely, extremely different than what we've been experiencing. Austin city limits, there is no such thing as an inexpensive home, especially nowadays. Sunshine after rain says people don't care anymore. I think it's gotten too easy. And you could thank the Federal Reserve for that. Kaka Silva is here. Good to see you, Kaka Silva. Welcome. Dan Zhang says you need to stage it in order to bring value up. Yeah, just the basic things, right? I think we're just going to go back to normal. Bono says Germany has a real estate crisis and a bubble brewing. Yeah, I think, for all the people that want to say that the United States has a massive housing bubble, you look at Canada and other parts of the world in relation to, so one of the metrics that I look at a lot is the percentage of your income or disposable income that's spent on housing. The United States, even though it's quite egregious, it's nothing to be compared to some places in Canada, select markets, especially in Toronto. You try to buy a house in Toronto or Vancouver, obviously those are very desirable areas. Beautiful, beautiful Toronto, love the city. But in relation to disposable income being spent on housing, it is much, much higher in other countries, to your point. Hey, Raj is here, says, hey Tom, hope all is well. When do you think home prices will correct? Thanks. Yeah, I mean they should correct, but I don't think there's any guarantee. What I think may happen, and I think this may surprise a lot of people, is prices may stabilize. So this huge run-up that we've had, right? So homes that were selling for $300,000 are now going for $500,000. We may maintain those price levels, but the price trajectory upward is not going to go up at 20% a clip year over year anymore. Those price gains may stagnate. However, this is what I will say about very, very select markets. I think if you crunch the numbers on the broad real estate market in the United States, I don't think values are going to go down that much. Where I do think values are going to go down are in select markets that have experienced crazy amount of irrational exuberance, excess, frothiness, and a huge influx of population all at once. Because usually in those areas, what happens is you have about 5 years of pull forward in price appreciation into 12 months, right? So I think those locations will probably revert to the mean. And if I just want to name some, and again, this is just my personal opinion, it doesn't necessarily mean it's going to happen. I would probably say some select markets in Florida, probably Fort Lauderdale, Miami. I would say Austin, Texas, probably Dallas. And I think some select markets in Arizona are probably going to have maybe about a 15% decline or correction. And that's not to say that these particular locations in these cities are not good for investment. It just means that you've had so much irrational excess of so many people moving there at the same time, bidding up these prices of homes, that you just need to cool off a little bit. So that's sort of what I'll say there. Raul says, hey Tom, hope you're doing well from Colombia. Hey, good to see you, Raul. Welcome. James says Vegas is always up and down. Yeah, I think Las Vegas too will probably see a little bit of a correction. Epspillion says hello from Russia. Welcome all of our viewers from Russia. Wendy England says, Tom, try buying in London, UK, or Paris. Yeah. Dan Zhang says, Tom, have you ever watched the show $1 Million Listing New York? That show with Ryan Serhant in it. I have. I actually watched that quite a bit. You know, I don't watch the actual show. I will watch clips on YouTube, but I actually do enjoy that show quite a bit. Bono Simic says, midterms must be a smash red wave. So, you know, we'll talk about, I'm actually going to touch on that for a little bit. And not to get too political, just to set the precedent, I don't care if you guys are Biden supporters or you lean Republican or conservative. It doesn't matter to me. We're all having a good time here. But I've said this many times, but I think it's important to say it again and state it again. We are coming up on midterm elections in the United States. Now, if we look at stock market performance during a midterm election year in Q1 and Q2, almost 90% of the time stock market returns are negative to flat. So that would say that this year is not an anomaly at all. So there's a lot of analysts on Wall Street, a lot of economists that come out here and say, oh, the stock market is going down this year after it's gone up the past 2 years. This must be an anomaly. Why is this happening? But it's actually kind of normal. If you look through historical trends, stock market performance during midterm election years are always very poor for reasons we've discussed again ad nauseum on the stream. Usually markets don't like uncertainty, right? They don't know if both houses of Congress are going to go towards the Democrats or both houses of Congress are going to go towards Republicans. And essentially, capital allocators oftentimes will wait until the political climate is a little bit more clear and transparent before they deploy that capital, if that makes sense. So, however, here's the good news. If you look forward after midterm elections, markets are always, well, not always, about 70% of the time are positive in the third and the fourth year of a president's term. And that's because a lot of those uncertainties go away, and the markets really, really hate uncertainties. Now, again, I will say, we are potentially setting ourselves up for, statistically speaking and historically speaking, the best situation for the stock market. And for those of you who don't know where we are actually standing on the corner of 7th Avenue and 57th Street, Billionaires Row here. And historically, if you think about what political environment produces the best or the greatest stock market returns, it is when you have a Democrat as a president. So we have that right now, President Joe Biden. And it's when you have Republicans controlling both houses of Congress, which is very possible for that to happen after the midterm election. So all in all, not to get political, if we have the quote-unquote red wave that everybody's talking about and Republicans take control of both houses of Congress, and obviously we have a Democrat as a president, you know, year 3 and year 4 of the Biden presidency could be really, really positive for equity returns. And that's just a fact. So I just wanted to throw that in there. Tiago is here. Welcome, Tiago. Good to see you. Bono says they are career politicians, almost the degree that we have here in Germany. Yeah, I agree. It's unfortunate, but I agree. Christina Kurth says yes, Boulder, Colorado even, though is contained, seems like a great investment. Yeah, I like Boulder. Like a lot of the markets, the select markets, or the sub-markets, I should say, that went up a lot, those will probably correct. But I think everywhere else, I think you'll just have price stability, but you're not going to have these crazy housing markets where, you know, if you list your house for sale in the market, you're going to get 50 offers over asking price. I think those days are long gone. Hey, Bruce Wayne is here. This is high stock market, the ultimate goal for overall welfare. Well, I think it depends on who you ask. If you ask the Fed, I think that would be true for the Fed. If you ask me, I would say no. But again, we could go into my whole tirade about the Federal Reserve, and you guys sort of know my take on that. I think the Fed sort of creates a managed market, right? So any time that markets go down even a little bit, you know, money managers and people around the world cry for uncle. and just hoping that Fed Chair Jerome Powell, or whoever the Fed president is at the time, or the Fed chair at the time, will come in and start to acquire assets, which is really bond purchasing and U.S. Treasuries and mortgage-backed securities and things like that. Honest as I've seen homes that haven't been maintained, no staging because it was so run down, yet they were still overpriced. Yeah, agreed. I think a lot of that excess, that irrational excess, is going to come out of the market. And I think that if you want to sell your house, you're going to have to do some work, right? You're going to have to stage it. You're going to have to clean it up. You're going to have to make a nice listing. I think the days of just throwing something on the market and hoping it sticks, I think those are gone. So this is another very nice hotel. If anybody is visiting New York, this is the Le Méridien. And this is also on 57th Street, Billionaires Row. Fantastic place. Hey, Glass of Beer 123, good to see you from Thailand, welcome. John E2 Icon, welcome John. ZZ says, when are you going back to Miami? That is to be determined, ZZ. Misuk Yu says, hey Tom, what are your thoughts on Uber? Well, I could tell you this, Uber, I think they are reporting earnings on Tuesday. So this is the market to look ahead stream. So I think Tuesday is going to be the big day on Wall Street in relation to corporate earnings. So we are going to hear from, I think the most anticipated reports that we are going to get on Tuesday, which is August 2nd, are going to be coming from Advanced Micro Devices, or ticker symbol AMD. We're going to hear from Airbnb, BP, Caterpillar, so ticker symbol CAT. Now, CAT is one of those companies that I always like to look for as a forward-looking indicator on a couple of industries: manufacturing, housing, and overall construction or commercial real estate development. Because obviously, if you think about what Caterpillar sells, is they sell heavy equipment, right? So oftentimes you could use that as a leading indicator for health in other markets. Hey, Photos from Around New York is here. What's up? Good to see you, Photos. Happy Sunday. Hopefully you had a fantastic weekend. Good to see you, Photos from Around New York. But yes, big week on earnings, especially on Tuesday. Uber will report Tuesday. Bruce Wayne says, great burgers in that hotel. Good to see you, Bruce Wayne. G says, I might just retire overseas, Thailand, Bali, or Mexico, or Greece. So G, I was watching some of those CNBC videos. You know how they have those CNBC Make It videos sometimes? And I guess people can live, in a really nice apartment in Mexico or in Thailand for like $500 a month. Stark difference, stark contrast to paying, $3,000, $4,000 here. So I don't know, maybe a lot more Americans and Europeans will start doing that. They'll work in the United States, they'll work in Europe traditionally, where you can make a lot more money, and then they'll retire somewhere else, maybe in Mexico or Thailand, where they get a little bit more bang for their buck. Maybe. But gee, good observation there. I think I agree with you. Bono says, it's unlike the Dow, a performance index which distorts the numbers. Yes, the German DAX. Yep. NBA Elias is here, says, hey Tom, I hope you're having a good weekend. I did. I had a phenomenal weekend.
Are we live?
Yeah, hey, what's up?
What's going on?
Good to see you. How are you?
Good, right? What's your channel?
Walks on Wall Street.
Oh yeah, I see it. So what's it? Yeah.
Oh, nice, thanks man, appreciate it. Fabricio, good to see you, man. Miguel says, just curious off topic, but what is your camera setup? Curious what bystanders are seeing when they look your way. So we use an iPhone 13 mini to stream. Kirby says, you will be paying double taxes in Spain. Frank Garcia says, Tom, the ARM and Ninja home loans are coming back. I mean, I don't think in the velocity as they once were in 2006 leading up to 2008. Christina Karth, welcome. So ARM stands for adjustable rate mortgage, if anybody is interested. DR says, new single family homes in Vegas start at $300K. Jared Covey says, wonder if Caterpillar is feeling the China real estate construction bust. Yeah, so Jared, that's actually a good topic to talk about. And it's interesting, if If you guys have been reading the Behind the Street newsletter, I know I haven't put one out. I'm going to put one out this week on Tuesday. But I've been really looking into the Chinese commercial paper market, which has really been concerning me, right? And if you look at, usually the indice that I'll look at, or the ETF or the fund that I'll look at, is the Crane Shares. Crane Shares has a ton of bond funds, but just look at the Crane Shares Chinese commercial paper market fund. And if you look at the lows of 2020, we have since broken those by a large margin, right? So if we think about a credit crunch or a seize up in the credit markets in China, what do we think they're doing now? And I think this is just starting to come to roost, especially now that there's so many roaches here. Especially now that we're seeing news out of China where people are actually refusing to pay their mortgages. But then again, we're not really seeing that many ripple effects through the Chinese economy, maybe because people think that the CCP is just going to backstop everything. I don't know, but I think those are all really good questions to ask. I just don't think I have enough expertise to throw it out. But yeah, Jared, I think we'll definitely get some insight into that on Tuesday when Caterpillar reports earnings, for sure. Jesse N says, shout out from Cal in Texas. Good to see you, Jesse. Welcome. NMB 045 says, Tom, is multi-generational living a solution for unaffordable housing? I think it's an unfortunate solution, but then again, in some cultures, right, and I think we had this conversation before on the stream, in some cultures, it's actually quite normal for you to live with parents, grandparents, aunts, uncles, cousins for quite a long time. It's actually not, in America, I think it's the norm when you're 18, you have to move out on your own and you have to do everything on your own. But if you look historically at other cultures, it's actually not like that. So maybe American culture will be forced to change towards multi-generational living, which I don't think is necessarily a bad thing, but I think others would argue it's maybe a quality of life issue. But I don't know, what do you guys think? What do you guys think about that? But if you're enjoying the stream so far tonight, everybody, make sure you hit the like button on the video and subscribe to the channel if you are new. We go live about 5 days a week between New York City and Miami. Wendy England says China has a much larger middle class now. Will be interesting. That's true. That's definitely true. China now has a much more robust economy as they had, let's say, in the 90s. Yeah, Sunshine After Rain says it depends on the culture. Mike C says if we take a shot every time Tom sees a roach. That's funny. Yeah, I mean, I guess it depends on the culture. Well, I'll give you guys a little bit of anecdotal data in a minute, but MBA Elias says, Tom, the numbers out of China are varied and difficult to take at face value. That's also true. That is also true, MBA Elias. And speaking of that, MBA Elias, did you see the SEC may delist a lot of the Chinese ADRs? And this is exactly what we've been talking about. So oftentimes, let's say if you log on to your Charles Schwab account or your E-Trade account or something like that, and you type in the ticker symbol BABA or JD or something like that, you're actually not buying the shares technically. You're buying the ADR, which is an American depository receipt, which are shares to a holding company, in which case they hold the underlying value of the stock, if that makes sense. So obviously, I think that the United States and the SEC, the Securities and Exchange Commission, really leads the world in providing or forcing companies to provide transparency in their accounting, in their reporting, when they report quarterly earnings and things like that. And China really doesn't want to comply with that, right? So it's a very, very good possibility that ticker symbols or companies like Alibaba will be ripped off American exchanges if the SEC and China don't come to a compromise in relation to reporting standards. So I think you're right on that. So we are now standing on the corner of 5th Avenue and 57th Street. We are overlooking the Tiffany building as well as the Trump Tower. And if you look at the top left-hand corner of your screen, you'll actually be able to see 432 Park Avenue, which is another one of those billionaire row buildings. Hey, GGNYC, good afternoon, good to see you. MBA Elias says, yes, good point. ADR trouble coming for stocks listed on UX exchanges. Yeah, and look, I really don't know. And you guys know. So about, I think this was late 2021, I did have exposure to Alibaba. I blew that position out for tax loss selling because I really, and you guys know, I've told this story a million times, because sometimes it could seem like I'm really dumping on China. But actually, throughout all of my college years, I've actually written multiple bull theses on China in relation to their startup culture, their startup environment, when it pertains to artificial intelligence, AI, and machine learning. And oftentimes we refer to the works of Dr. Kai-Fu Lee, which was the former president of Google China, in which case now he is retired, and he runs Sinovation Ventures based out of California, where they exclusively only invest into Chinese machine learning and AI companies. So I think the innovation that you're seeing out of China is top tier. I just think that the system that they employ, in my opinion, is not enough to compete with the likes of the United States. I think if they had a true capitalistic system and dropped, the oversight of the CCP, I think they would have better results. But again, that is just my view, and that is up for debate. But yeah, it's very hard to make an investment in China because there's so many uncertainties. There's a lot of uncertainties there. So this is directly outside of the Tiffany building here. Hey, Mark Francis is here, says in 1901, Brooklyn, all family lived together. We were from Italy. So it's pretty much same story with my family too. Pretty much same story. It could definitely be a pretty good life hack to live with your family as long as possible. But I think I would probably say after the 80s, there's been this big cultural norm and cultural push for kids to leave the nest at 18. But a lot of times that could set them up for failure, in my opinion. MD says, is this real live? Many of this vids ain't live. I guess we'll have to find out. Brian says, Tom, what are your thoughts on China's technology development in light of forced or mandatory technical transfer for foreign companies? Well, I think I may have just touched on that. I think I read your comment a little bit late. But yeah, I think that there's great entrepreneurs. I think that there's phenomenal talent and brilliance coming out of China. But I just think the system in which the rules are set are not as lucrative or prosperous as the ones in the US. I think that's just what I would say. Hey, Patrick Schultz is here. Welcome, Patrick. Good to see you. Bono says China has a culture of simply copying things to a lesser degree. So Bono, that is true. However, after the 2000 tech and telecom boom, that narrative has completely changed. So I'm going to recommend a really good book for the group here as we walk past the Trump International Tower here on 5th Avenue. So I want everybody to do some diligence or do some homework and read a book called AI Superpowers. So once again, the book is called AI Superpowers by Dr. Kai-Fu Lee. And I think you're going to get a really, really good grasp on China as a whole when it relates to innovation in AI, machine learning, and artificial intelligence. And I think Dr. Kai-Fu Lee is probably the best person to learn this from, being that he has firsthand experience running Google China, the search part of the business, during the 2000 tech and telecom bust. So the book details, step by step, essentially the evolution of China when it relates to them, essentially being a ripoff of Google, being a ripoff of Facebook, but to more evolve to actually have their own proprietary tech, which I think is phenomenal. Brad's Brains is Tom. My family wants to move to Houston. Sister offered nephew's room temporarily since he'll be in college. Very nice. Mike C says, it's rare that multi-generational housing is anything more than the kids living in the home mom and dad still own. Yeah, I mean, that's true. I mean, you know, what I'm seeing now, you know, I could talk to isolated markets like Long Island. Okay, I'll talk to Nassau and Suffolk County. Some of the things that I see and some of the things that my friends are actually doing just to be able to own a home or try to build some sort of home equity if they can. So if we refer back to the largest study ever done of first generation millionaires in the United States, the data will show that the vast majority of that first $1 million is made up of not in US equities, not in cash, but in the home equity in a single family home, a duplex or something like that. So here's my concern. If we continue down this path where home ownership continues to be further and further out of reach for the average person, what does that mean about class mobility in the United States? Well, that probably means that class mobility is either going to decelerate extremely, extremely fast or be non-existent. And I think that's exactly what we're seeing. So judging by the statistics or the fact that for all first generation millionaires, meaning you didn't inherit it, you didn't get daddy's money or something like that, the way they got their first million is made up of equity in a home, right? Which I think is a good thing. I think, you know, generally speaking, as long as you don't get irrationally exuberant with it and overpay for real estate, I think real estate is a good investment, right? Especially if you can house hack when you're young, or let's say if you're in your early 20s, buy a home and rent out the individual rooms, in which case, after 20 years, what did you really pay for the house, right? You only paid your down payment. But we can go into that in another video. But I think that's my main concern for the housing market. So in relation to the Long Island market, what I'm seeing is a lot of my friends, they're pooling money with their sister, with their brother, with their uncle, in order to put a down payment collectively on a home, to which case the entire family will live in it, right? So a lot of the times they'll buy a duplex in Lindenhurst or something like that in Massapequa, but they'll move the entire family in there, which I actually don't think is the worst idea. Because again, going back to that statistic, if you want to build, or at least try to build, or attempt to build generational wealth, real estate is a big part of that puzzle, or a big piece to the puzzle. So that's what I'm seeing. I'm seeing a lot of brothers, sisters pooling together to make a down payment on a home. It's very hard to do it as an individual, or at least getting it increasingly harder. Hey, Marty Lewis, what's up? Says hello, Tom, and everybody here. Marty Lewis, any swimming today? Any swimming? Usually Marty Lewis is usually always coming back from swimming. Glowing Star, welcome. Austin City Limits says gas in New Mexico is down to $3.79 a gallon. Well, that's progress. MBLI says recently Jeep pulled out of China over government meddling in its business. This is the root of the problem when doing business in China. Millions of investments gone. That's true, MBLIs. Bonus is just the fact that you, sir, say buy a house when you're in your early 20s shows the discrepancy here. In Germany, that is impossible for most, on average, 20-somethings do not think about buying homes. Okay, so is that more of a, because I'm not from Germany, I'd love to learn a little bit more. Is that a cultural difference, or is that just because they can't afford it, or sort of what are the reasonings there? Because again, me being from the US, is it sort of that same problem? Like, what are the objections there? Is it just a factor of income? Is it a factor of savings? Are you experiencing the same problems as the US housing market where, you know, a starter home is now like $500,000? Hey, Hits says hello from Brazil. Welcome to all of our Brazilian viewers. Good to see you. Hey, David Stubbs, thank you so much for the support to the channel. I appreciate it, David. Much appreciated. Andrew says, show how you walk safely. Don't jaywalk. Safety first. Glowing Stars is where are you from? I'm from New York. Brian says, Tom, you probably went over the drop in gas, but what is the reason for the drop? Well, I think you're having demand destruction, right? I mean, what do you guys think is the reason for the drop in prices? I think it's just you're getting demand destruction, right? So if we think back to what we were talking about on the last stream, I guess we'll cross the street here. If we talk about what we were talking about on the last stream yesterday, last week ExxonMobil, Chevron, and Shell reported earnings, and they reported absolutely gangbusters blowout earnings. I think collectively the three, just in Q2 alone, raked in over $42 billion in profits. Now, the number one reason why profitability was so high is because the refining margins were huge. So if we think about what happened during the pandemic, right, during 2020, a lot of the refining capacity came off the market to the tune of about 3 billion barrels a day. Now, if you are a big oil company, you need that refining capacity to meet demand. And nobody, I don't care if you're the best economist in the world, I don't care if you work at Goldman Sachs or Schmoldman Sachs, whatever, I don't care. Nobody could have predicted such the fast rebound in demand for oil, right? Or just how fast the demand for, travel came back, the return to normal came back. Nobody really could have predicted that. So what the situation that we had was a massive pull forward in demand of probably like 3 years, and still about 3 million barrels a day of refining capacity short. So the refining margins went through the roof. And I think I listed, I put in the Nightbot or in the chat, or if you guys go to my YouTube community page, if you click on Walk Some Wall Street and go to my YouTube community page, I actually posted the Chevron investor deck for everybody to view. And I think it's important to go through that because the CEO actually details and outlines exactly why profitability and margins were so high. So I think now you're seeing a consumer that just can't take it anymore, and we're starting to see demand destruction. And I think that's exactly what the Federal Reserve wants, is demand destruction. I think that's exactly what you're seeing. Oh, you can go. Yeah, good.
Sorry.
No, it's okay. Money Machine Gun, welcome, good to see you. MN is here, good to see you, MN. Rafaela says, which part of the city is this? So we are standing pretty much right on the corner of West 51st Street and 5th Avenue, standing right outside of the St. Patrick's Cathedral, one of my favorite spots in the city. Check out how beautiful the architecture on St. Patrick's is. Beautiful. Hey, Life, Liberty, and Guns is here. Says, good evening, Tom. Good to see you out and about. Thank you so much, Life, Liberty, and Guns. Good to see you as always. Photos from around New York says Atlas carrying the universe on his shoulders. Love that. Honest is a beautiful view. Cayenne Pacific says, hey, Tom. Good to see you. Welcome. Trolling to the right says, hope you're having a good time out there in New York. Thank you so much. Ved Parwar says, what is this statue? It's exactly what Photos from around New York put in the chat. So if you want to come here and see it for yourself, this is directly in between 50th Street and 51st Street and 5th Avenue. Skylar Myers is here, says, hey Tom, you are my favorite part of town. Yeah, Skylar, this is one of my favorite parts of town too. One of my favorite parts of town as well. But check this out, everybody. I wanted to run this by everybody in the chat. So I was reading Barron's today, and I know we have all this talk about ESG, environmental social governance. We have all this talk about the price of oil going crazy, the price of natural gas. But listen to this, get a load of this. And this is in relation to coal. It says coal has been fading for over a decade, meaning so the usage of coal in our economy to produce energy has really been fading over the past decade for obvious reasons, right? But in 2021, it roared back. More was used to generate electricity than in any other year. Coal accounted for 58% of U.S. power sector carbon emissions in 2021. So think about that. As we are having this massive push towards ESG, everybody's talking about going green. This year alone, or last year I should say, in 2021, coal accounted for 58% of the U.S. power sector's carbon emissions for 2021, despite making up just of a quarter of the fuel used in electricity. Globally, coal produced a record 10,244 terawatt hours of electricity. I mean, my God. Now, again, I don't think this is going to be long-lived. I think this is just going to be short-lived, obviously, because I think the number one reason is, supply chain issues, what we talked about before with the refining capacity still lower than where it needs to be. And even if we go further into 2022, you see what's going on with the Russia-Ukraine situation, so obviously you have to find other energy sources to make up for that demand. But I just thought that was crazy that coal accounted for 58% of U.S. power sector carbon emissions in 2021. And if we think about globally, coal produced a record 10,244 terawatt hours of electricity in 21. Really, really remarkable stuff. I would have never guessed that in a million years. But here we are, Rockefeller Center. Robert says clean coal plants don't have that much emissions. That is true. There's actually a thing considered clean coal. That is true. Yeah, NBA Elias says Argentina has 70% inflation. Feel bad. Yeah, well, just think about that for a second. So Argentina running at about 70% inflation, and we're running at about 9%, or I would just round it up to 10, might as well, who cares? And Americans are hurting just based upon that. Think about what some other people in other countries are feeling, especially now that the US dollar is showing ridiculous strength. Hey, Eyeglass Lady, always a pleasure to see you. Hey, BP is here, welcome. Christina says amazing skating in July. Yeah, so this isn't the ice skating rink, this is the roller skating rink here at Rockefeller Center. They will be converting this into an ice skating rink just in time for the holidays. We'll be seeing that on the stream. Yeah, Brian says the fake bots are here as usual. Usually every single time where we hit the 1 hour mark on the stream, we usually get the fake bots coming in here. Hey, running at altitude is here. Says I had to do a double take. I thought they were ice skating. Steven says energy so clean, it's not even included in the Tax Reduction Act. RJ, good to see you. Hey, Who Dat Dave? What's up? Always good to see you, Who Dat Dave. Ooh, she fell really hard. I hope she's all right. Ryan Royal says, good evening, Tom, mods, and everybody. Sorry I'm late. What are we talking about tonight? So we were just doing the Markets a Look Ahead stream. So just to do a quick recap, we only have gotten to Tuesdays so far, but on Monday, which is August 1st, which is the first business day of the month, we will be hearing from the Institute for Supply Management. They're releasing its Manufacturing Purchasers Managers Index for July. Many economists forecast a 52.2 reading, slightly lower than June's 53%. So obviously, as we talk about all the time on the channel, the manufacturing sector makes up about 20% of GDP. So as we are seeing steep deceleration in the PMI numbers, that is something to watch, and that is of great concern. But it's good that we were covering this on the stream for the past 6 months, because we've been seeing every single month deceleration, and like clockwork, we have gotten 2 consecutive quarters of negative GDP growth. So this is another, reason to really watch those PMI numbers. Hey, Thiago is here. Says good evening, Tom and everybody. Good to see you, Thiago. Hopefully you are doing well. We have Andy here from South Korea. Andy, hope all is well in Korea. Always a pleasure. Joan is here. Good to see you, Joan. And it's also a big week for earnings. So Tuesday, we're going to hear from AMD, Airbnb, Caterpillar, PayPal, SolarEdge, and Uber. Now, I will want to note that if we look at the sectors that are really outperforming within the S&P, or just the market in general, if you look at the solar sector, solar is really outperforming. Solar is really, really outperforming. Hey, Brian says, Tom, what are your recommendations for visiting New York City in September? I think Central Park is a must-go-to in September, because usually the temperature is not as crazy here. So I would say do a lot of outdoor activities in September, because it's not going to be hot and humid. That's what I'd say. Yeah, Dennis Henry says, isn't Caterpillar moving their headquarters out of Illinois? Yeah, you're right. So they are, and this isn't the first company that's moving out of Illinois as well. We've been talking about Citadel Securities, the founder and CEO being Ken Griffin from Citadel Securities. They are now moving to Miami, Florida. And I think the number one reason is obviously probably the tax rate. Right, as we know, Florida does not have any state income tax. But everybody, this is the exact spot where the Rockefeller Christmas tree will be, right here. Yeah, Laurie E says they're moving to Texas. Andrew says age, time, work, future. Interesting. Hey, Wilder Santos. Brad's brain. Yes, as you'll be surprised at how unstable you'll feel after you haven't skated in years, and then you finally get back on the skates. You're right. I'm seeing a lot of people talk about the top of One Vanderbilt. Yeah, I would recommend that too, and I haven't even been there yet. So I would definitely recommend the top of the One Vanderbilt. I think that's something that we're probably going to have to do on the stream. Hold on, let me just take a quick water break here. But if we jump ahead to Friday, everybody, so on August 8th, this is something that's very critical that we need to pay attention to. So we're going to be hearing from the Bureau of Labor Statistics. They will release the jobs report for July. Now, many economists think that the economy added about 250,000 jobs, so 250,000 jobs. That's after 372,000 increase in June. The unemployment rate is forecasted to remain unchanged near a half-a-century low at 3.6%. Now, we've been talking on the stream why I think the unemployment rate is a little bit misleading. I think the better gauge to the health of the U.S. economy is the labor force participation rate, which is still at lows before the pandemic, so it hasn't fully recovered yet. So I think the biggest argument on Wall Street and throughout the economy is, listen, if we had 2 consecutive negative GDP prints, that means we had a recession, right? Well, there's many economists that would argue, look, there are some slight nuances to this. There are some slight nuances. And I get it, employment, the health of the labor market, the health of wages, I understand all that. But I think you guys know what I think. The thing that I think is that for the average American like me and you watching the stream, you guys are going to be indoctrinated this week with an unbelievable amount of propaganda from both the right and the left. You guys are going to get hammered with it, and so am I. And this is what I mean by that. If you watch Fox News, they're going to be like, oh, the U.S. is in a recession. The U.S. is falling off a cliff. It's going to hell in a handbasket. You know, why don't you just hide under your sofa until 2024? So that's the narrative you're going to get from Fox News and all those media outlets this week. Now, if you watch CNN, you're going to get, oh, it's not a recession, everything's great, more people are back to work than ever before, and it's just going to be a BS narrative. That's not true. The thing that I want to try to implore everybody that watch this stream, both on the right and the left, because we have both left-leaning people here, which is great, and both right-leaning people here, that is great. My piece of advice is completely and utterly block out the noise in relation to the recession argument. Completely act like it doesn't exist. Don't consume it, because at the end of the day, think about what's going on in your everyday life. Has anything changed? Think about your personal recession. Is your personal life in a recession? Is your personal finances in a recession? So instead of bickering amongst each other and on Facebook like the media wants us to do, you know, try to focus on getting your own financial house in order and focusing on accomplishing your goals, getting that promotion at your job, moving up in the ranks, starting that new business you want to start. Because regardless if GDP has 2 consecutive quarters of GDP prints being negative or 6 consecutive quarters of negative growth, there's going to be entrepreneurs, not only in the United States, but across the world, that are going to wake up every day, that are going to go to work, and if they don't have a job, they're probably going to try to innovate some new product or service, and the world is going to be okay. Things are going to be fine. So turn off the media, turn off the narratives on both the right and the left, and just go about your normal business and focus on what you got to do, right? Focus on innovating a new product or service, focusing on building that company you always wanted to build, right? Don't focus on the bickering of, you know, semantics of what is the definition of GDP or what is the definition of a recession. I think it's irrelevant. I know that may be a little bit of a hot take there, but that's what I'm going to do this week, because this week I know there's going to be a huge argument on all the, you know, Bloomberg, CNBC. They're going to have all these talking heads that are going to be fighting with each other. But at the end of the day, the most important thing for us to do is get to work. You know, buckle up, put your seatbelt on, put your head down and go to work, right? And that may be figuratively or that may be realistically if you're actually going to work. But I think you guys get the point. So don't let because I'm just forewarning you guys, you're going to see plastered on all the media outlets, oh, you know, the Biden administration is trying to disguise the recession, and then you're going to see, you know, this is all Trump's fault. It's nonsense. It's all nonsense. So That's my little piece of advice there. Hey, Who Dat Dave says, I'm retired, so I promise to work harder in my exercise classes. I love Dave, man. I love Dave. Oh, Dennis Henry, that's a good question. So I've been getting this question a lot about I bonds. So I'm not a big fixed income guy, to be honest, but I think there's limitations on how much you can invest in I bonds. Is that correct? Could anybody back me up or prove me wrong on that? Because I don't own any, I don't have any exposure. I think it's like $10,000, isn't it? Does anybody know the amount you could? 10,000? Okay, Dennis says it is 10,000. Yeah, I mean, look, I honestly don't own any bonds. But then again, we always talk about on this channel, I think finances are really personalized. And I think I'm still young enough where I think my equity exposure should still be near 100%. But again, I'm not a financial advisor. If you're worried about it, I'd talk to a financial advisor. But at the end of the day, even if you're getting 10% yield on 10 grand, I mean, it's not really going to be a life changer. But I mean, it's something, right? It's definitely something. But I think just where I am in my life, right? If you're still in your 20s, I think you should, right? And again, it's not financial advice. But if you're in your 20s, I think you should probably be almost 100% equities. I mean, I may get some pushback on that, but at the end of the day, even if the market, let's say the S&P 500 goes down an additional 25% or even 50% from here, if you are new to the job market and you're investing in your 401k or you're investing in an IRA or whatever type of retirement account or even your brokerage account, you have time for the market to recover, right? You're in your 20s. But that may not be the same case for somebody who's in their 50s or 60s. So I think, I don't really look at bonds because most of my allocation is towards equities, to be totally transparent. Hey, Jim says the media has been destroying the United States for many years on both sides. I would agree with that, Jim. I would agree with that. And that's why I try to get all of my news from financial media outlets, because I think it's a little bit harder to distort the narrative. I mean, it's definitely, you can distort the narrative, but I think it's easier to distort the narrative when you're talking about financial concepts, right? In relation to corporate earnings, about forward guidance of particular companies. So if you want to know how the economy is doing, during earnings season, it's free. Just go to the investor relations page of any of these companies that are reporting and just listen to the conference call. And the CEOs will literally tell you what the average consumer is feeling out there. So that's sort of where I try to get the news. I think, if you watch, and again, this isn't to really berate anybody. I tend to be a positive guy, but at the end of the day, media is all about selling advertising, right? Tucker Carlson, I get it, he's a great guy, but he wants to rile you up, right? He's a showman, he wants to get you riled up, I get it. Rachel Maddow, she's a fantastic woman, she's a fantastic public speaker, but at the end of the day, she wants to sell advertising for CNN, which I get. So a lot of the times, she'll get you riled up. My goal is to tell you guys, don't get riled up, focus, don't get upset, don't let your blood pressure boil, and just focus on the fundamentals. And don't go to the office this week and fight with your coworkers about if we're in a recession or not. Just put your head down and go to work. Hey, Iris Lou is here. Hey, what's up? Good to see you. Always a pleasure. Hey, Bagels and Walks is here. Says, hey, Tom. And New York City friends, just hopping on now. Empire State Building is glowing tonight. Ooh, we're going to have to take a trip down to the Empire then. I wonder what color the Empire is. Bonus is agreed, sir. Equity beats out, especially in economically as well as socially. Mike C says the old age is subtract your age from 100, and that's the percentage of bonds you should have. Wow, Mike, I've never heard of that one actually. Hold on, let me go back to Mike C's comment. I've never heard of that one actually. Subtract your age from 100, and that's the percentage of bonds you should hold. I think that's pretty high, man. So I should have a 27% allocation to bonds. Huh. Wow, I don't think I agree with that, but then again, I don't know. Interesting. Everybody, this is a fantastic steakhouse here. If you're ever visiting New York, Del Frisco's. I think I told you guys about 1 million times now. I used to take a lot of clients here when I used to work right here at the Marsh McLennan building. Really good place, really good steakhouse. A little bit pricey, but I mean, if you work for a company and you're using a corporate card, I mean. Hey, Rapid Freelance, thank you so much for the $3 donation. This is how do you get 1K subs on YouTube to monetize? I mean, we've really just, so every day after work, I usually just live stream and, talk to everybody in the chat. And at first there was really nobody that would join, but I would just still do it every day. And, over time it'll grow. I just think, maybe just patience. So if you just continue to, put out content or stream, and if you really like doing it, and I think you'll get there as fast as possible, for sure. I don't know, I think I just do it because I really like it. I just do it because I love doing this. And it's awesome to talk to everybody. I mean, I think it's a really big blessing for me. I mean, especially, since we talk about finance so much. I mean, think about all of the input that you guys give me. I mean, who else has access to, turn on a stream and talk to 730 people at one time from all over the world, giving their different opinions, giving their 2 cents on things. I think that's really valuable. Not only for me, but everybody on the stream too. Who Dat Dave says percentage of stocks makes more sense to me. Yeah, I think for somebody in your 20s, I think you'll be fine. And again, I can't really tell you what to do. I'm not a financial advisor, but look, if you're in your 20s, if you just put all your money into the stock market, right? Like invest, like let's say if you take 15% of your income and you just buy all stocks with that 15%, even if the market goes down, you're gonna have time to recover. I mean, that's sort of the way I look at it. I mean, the average person retires at what, 68? I mean, if you're 25, you got a long ways away, so. GGMYC, thank you so much for the kind words. It says this channel is worth checking out, lots to learn. Appreciate it, GG. So everybody is always welcome on this channel except for the spam bots. Please don't click on the spam bots. Sabrina Fair says, I know peeps working into their 70s now. So Sabrina Fair, I think it's going to be interesting to touch on that a little bit. Out of the most successful people that I know in my life that are extremely old, I'm talking into their 80s, these people are still working every day. But here's the different characteristic about those people that are older and that are still working. They tend to own their own businesses, or they run like a big real estate management company, or they run, a venture capital firm or something like that. It seems as if, and I don't know, let me know what you guys think in the comments. I think you can work longer, both in the duration of hours a day and years, if it's something that you personally own. I don't know, again, I could be wrong, but again, in my previous sales jobs, I mean, I loved the job, right? I loved it. I made good money at it. I loved my coworkers. But it's not like I was like so excited to go to work. I mean, it was a job, it paid the bills, I had a good time, I loved meeting clients, I loved what I do. But I didn't, if somebody said, oh, would you want to do this at 80 years old? To be honest, no is the answer. But I think if you have your own business, maybe, you're more into it because it's something that you own. I don't know. Again, that's just another piece of a little anecdote there. This isn't my real name. Google says, are you still in sales? Oh yeah, absolutely. So I am in enterprise tech sales. So I sell software and hardware into the Fortune 500. Iris Lou says, Tom, you put 15% of your income into the market, but make sure you buy a good company and don't gamble. Yeah, that's also a really good point by Iris. A lot of people will say, oh, I'm investing 15%, but to Iris's point, they just buy like, the meme stuff, which is all nonsense. I think probably index funds are the best. But if you want to get serious and be a serious money manager and manage a portfolio and maybe someday start a fund and raise money, then you could be an individual stock picker to try to generate alpha. But again, you have to really dedicate your life to it. But I agree. Yeah, but for most people, like in my retirement account, right? Like in my long-term retirement account, I pretty much have the whole thing indexed towards the S&P. So a percentage of my income, right, whether that's a salary or whatever, just automatically buys the market every month. But then I also have a taxable brokerage account, in which case I run a long-short portfolio, in interactive brokers to try to generate alpha. You don't have to do both. I just love finance, love the financial markets is why I do both. But many people just, buy the S&P, and I think that's a great idea. I think it's a great idea. Hey, Frank Garcia, what's up? Says Tom, do you know if more affordable housing is being built since rents are increasing across the country? Let me knock out a few of these spam bots real quick. So Frank, I think it's a good question, and I actually want your input on this. So if anybody read the Wall Street Journal this Saturday, so the Saturday edition of the Wall Street Journal had some interesting, it may have been an opinion piece, it may have not been. Let me think about that for a minute. Okay, I don't know if it was an opinion piece or not. I'm gonna have to do a rain check on that. But I'll post a link to the Wall Street Journal article after the conclusion of the stream. But they were talking about hybrid work and how hybrid workers could potentially inadvertently solve the housing crisis and affordability crisis in America. And it was an interesting proposition. Here's the thesis. Let me know what you guys think. We talked about this at the beginning of the stream, but they say based upon the vacancy rates at a lot of this commercial real estate, so a lot of office buildings in major cities like New York, in Miami, Dallas, you name it, since really only people are going to work maybe like on a Tuesday or a Thursday and are in a more hybrid type environment, the government should bring about incentives via tax credits or something like that, or any sort of government program or whatever. This was just one of the ways that they were thinking to convert or do a rapid expansion of conversions to the office buildings in major cities that have the lowest vacancy rates. So offer, maybe the landlords of buildings that have the lowest vacancy rates, or the highest vacancy rates, the highest vacancy rates, and offer them a really good deal and work with developers to try to convert those commercial buildings that are predominantly office buildings into housing units, right, apartments. And I think that's actually a pretty good idea. So imagine if, politicians and also the free market could work together and run data, like, maybe hire CB Insights or something like that, and run the data on what office buildings in New York have the highest vacancy rates, and maybe put these buildings into a pool where we potentially could position them to be converted into apartments. I think that's a really good idea. So the premise of the article was that due to the introduction of a hybrid work environment where people really don't go to the office 5 days a week anymore, they may only go in 2 days a week, and a lot of big corporations are now downsizing the office space, why don't we run the data? Wow, the Empire State Building is looking great today. Why don't we run the data and say, okay, the highest vacancy rates, these are going to be put into a pot or a pool for subsidies or tax credits or whatever, and from there we're going to develop affordable housing units. I think that's a pretty good idea. PL830 says, I thought you were basically already doing that. I think they're doing that on a smaller scale. So they do that a lot in Lower Manhattan. So in the old financial district, it's technically still called the financial district, but like 95 Wall Street was, I think it was JP Morgan's former office way back in the day, but now it's a luxury apartment building. But the problem is in New York, anytime developers get their hands on something, they're going to put it towards the luxury side, not the affordability side. Hey, this is my real name, Google. This is A, Salesforce Tower. Was a former intern for software engineering there. Hey, awesome. So Salesforce is sort of like my arch nemesis, but then again, Mark Benioff is probably my favorite enterprise software CEO ever. Obviously, if you're a salesperson, you live and breathe Salesforce by updating opportunities, putting in leads. So I know the ins and outs of Salesforce pretty like the back of my hand, but it's a great company to work for. And again, piggybacking off of what I was saying earlier, Salesforce is another company out there now that is pretty much telling workers you can work from wherever you want. If you want to work in New York, fine. If you want to work in Silicon Valley or San Francisco or wherever, you can pretty much work wherever you want, and you don't necessarily have to be in the office. So Salesforce is a fantastic company. Ticker symbol CRM. Last quarter we were covering it. We were covering their earnings. This was the first quarter where their acquisition of Slack was actually included into their earnings. So for those of you who don't know, Slack is essentially a collaboration work tool that competes with the likes of Microsoft Teams. Now, I've used Slack, but then again, right now I use Microsoft Teams, and I think Microsoft Teams suffices more than enough. But Slack is still a good company. I like Slack. I think it was a good acquisition. But yeah, Salesforce is really the pioneer in SaaS, or software as a service. Hey, Patricia DNS says, hi love, love your lessons. It brings me peace. God keep you. Good night. Thank you so much. That was very kind of you to say. Very kind of you to say. Thank you. Wendy England says the highest vacancy rates are on Billionaires Row. Yeah, but again, so Wendy, you're right, but those aren't really office buildings. Those are, residential apartments or condos where billionaires or Saudi billionaires will buy a $100 million apartment and they'll just keep it there, probably to launder money. I probably shouldn't have said that, but well. Star Fox, just cool it a teeny bit. Dan Zhang says, have you ever watched the show? Oh, sorry, I think I read that one. Yeah, James says, I use Slack all the time, it works well. So here's where I think the argument comes in versus Slack and Teams. I think Teams is free with MS 365 suite, isn't it? But I think Slack you have to pay. I think. James Bond says, you said it. Yeah, I mean, it slipped out. C says, cheers from Buenos Aires, Argentina. Manhattan looks so good. Hey, love everybody from Argentina. A lot of Argentinian viewers that watch the stream, so I appreciate that very much. We have Daniel G that always joins in. So greetings and welcome everybody from Argentina. Happy to have you here. So this is Bryant Park, one of my favorite parks. Hey, Jim says, I've been blessed to have a 33-year career in the federal government and more blessed with the pension. Hey, that is awesome, Jim. Congratulations on your success, my friend. You earned it, so enjoy your retirement if you're retiring. That's phenomenal. Yeah, I mean, to Jim's point, everybody, wow, check out the Empire State Building tonight. I'd say this is probably like an 8.7 out of 10, 8.7 out of 10 rating. To Jim's point, a lot of companies now, they don't offer pensions, right? It's essentially you're on your own. So back in the day, especially if you work for the federal government or like a municipality, if you were in civil service, a lot of times you got pretty good pensions, especially here in the NYPD, sanitation, or FDNY, especially some of those guys with the tier 1 or tier 2 pensions, really making out like a bandit there. But then again, I'm a little bit conflicted on that, because here's why. I know the pension system is not sustainable, but oftentimes they will run, like a New York Post article that, slams a particular, NYPD officer because he's going to get a $250,000 pension. And he's like, oh, he shouldn't have got that. He absolutely should have gotten that. He absolutely should have gotten that pension. He deserves every damn dime of that pension because he was out walking the streets of New York in the 70s and 80s and 90s when things were going crazy trying to keep everybody safe. So yeah, he deserves every dime of that pension. But not to get too heated, but I digress. Same with the FDNY. I mean, I think if you dedicate your life to serving your community, you deserve every dime of your retirement. Again, maybe a little bit of a hot take there, but so this is the beautiful fountain here at Bryant Park. I think it's actually raining a little bit. Wow, so this is also the One Vanderbilt building, which is looking beautiful too. Hey, Michelle and Ann. Says never visited USA, but New York, Manhattan is on the list. Yeah, you gotta come, it's absolutely beautiful here. The city's opening back up, so please come for a visit. Michael says, how's your night going? Love the stream from Corpus Christi, Texas. Good to see you, Michael. Things are going good. We're just doing the markets to look ahead stream. Very, very big week on Wall Street coming up. A lot of economic news, a lot of earnings, and a lot of the jobs numbers are coming out too. But we are going to hear from Uber on Tuesday, SolarEdge, PayPal, Airbnb, Caterpillar, and AMD all reporting on Tuesday. Hey, Retired in Florida is here. It says, hello, Tom, and thanks. Your position on a stock such as HKD that mooned from 40 to 400 in 4 days. Too many young traders were burnt shorting the stock. Too many folks gambling in the market. Yikes. Yeah, I'm not too familiar with that ticker, to be honest, but yeah, that does seem like some crazy action. Maybe probably due to a short squeeze or something, right? 40 to 400, geez. Yeah, that definitely has to be some sort of a short squeeze action there. Hey, DowJones.eth is here. Good to see you, DowJones.eth. Always a pleasure. Thank you for joining the stream. So if you guys want to connect during the day, so usually we stream at 8:30 p.m. New York time, but if you guys want to connect during the day, feel free to follow me on Twitter if you guys have Twitter. It's a place where I post a lot of my equity research, my thoughts on the markets, and sales for anybody that's trying to break into enterprise tech sales, enterprise software sales. I tend to be very active during the day on Twitter, so you could follow at Walks Wall Street to connect with us there. It's always a good time. Yeah, Mike C says New York City looks amazing tonight. You know, we talked a lot about China tonight, and the Bank of China is right on the corner here at West 40th Street and Avenue of the Americas. There's actually a pretty good coffee shop right next to the Bank of China. Now, the SEC, so the Securities and Exchange Commission, is in a little bit of a battle with China now. And there is a pretty good possibility that a lot of the ADRs, or the American Depository Receipts, will be delisted. So a lot of the Chinese names could potentially be delisted from the American exchanges. Really due to disclosure, financial disclosing, I guess you could say standards and criteria. So if anybody remembers this company, I think the ticker symbol was LK. Luckin Coffee was the company. Now, I was actually following this company pretty closely because obviously that we talk about on the stream, the investments that you want to look for are companies that are growing their earnings and their sales, that have fantastic return on equity, that have good pre-tax and after-tax margins. And this stock, Luckin Coffee, pretty much ticked every single box, but there was something that was really, really off that sort of threw me through a loop, and I'm like, wait, how come there's pretty much no institutional investors that own this particular stock? And that's one of the real reasons why I didn't buy it. I'm like, look, Fidelity's not in here, the Fidelity Contra Fund's not in here, Goldman Sachs isn't in here, Morgan Stanley's not in here. How come none of the heavy hitters are in this particular stock if the fundamentals are so good? Turns out the SEC did an investigation and the company was a total fraud. They were fudging their financials, they were lying about their revenues, they were lying about their EPS, and that has been a huge concern for a lot of Chinese names is because they do not have to disclose to the level that US companies have to disclose in relation to their financials and their earnings, right? So every time you have an American company that reports earnings, they have to release something that's called a 10Q. Okay, they have to release something that's called a 10Q. So the 10Q is the quarterly report, and the 10K is the annual report. So a company throughout its fiscal year will release 3 10Qs and 1 10K, right? So one for each quarter. So there's not 4 10Qs, it's 3 10Qs and 1 10K, and the 10K is inclusive of the fourth quarter financial results. A lot of Chinese companies do not have to have the disclosures that American companies do, and that's why the SEC is threatening to delist a lot of the ADRs. Dan Zhang says, in China, Luckin is actually pretty popular. Yeah, so they're definitely popular. There's no doubt about that. But they were lying. You can't forge and fudge financial numbers. That's the only thing that is definitely not good. But yeah, it's definitely a huge, big coffee chain in China. It's very popular. But they were lying and fudging their financials, which is definitely a big no-no. Hey, Asmurray6 is here. Says, good evening, Tom. I really enjoy the live show and the city on a Sunday night. Thank you, Asmurray. Appreciate it. Yeah, so Matthias, so a company will have 3 10Qs and then 1 10K, but the 10K is inclusive of the last quarter. Hey, Abdullah is here. Says, hey, Tom, good to see you, Abdullah. Welcome. Hopefully you are well. So we're making our way to Herald Square, 34th Street Herald Square, where we are going to see a beautiful view of the Empire State Building tonight. I'll show you a quick view uptown where we were at the Salesforce Tower and the Bank of America Tower. Yeah, so that is not Madison Square Garden at the end, see, but we will go there now. Yeah, John says August 1st tomorrow. Yeah, indeed it is. August 1st is tomorrow, new month. Kind of crazy how fast time has flown by. Hey, NMB045 says, I used to get cheap breakfast every morning from Bryant Deli on the corner of 38th Street. Really? Let me see. So this one here. Okay. You know, I think NMB045, that particular deli or bodega is owned by Mercy Market. And I used to go to a Mercy Market as well on 57th Street back in the day when I lived up near Central Park, but it was pretty good. I think it's Korean owned. I think a Korean family owns it. Really good. It is good. You're right. Yeah, Dan's like so much time has passed since 2020. I know, it's insane. So I think I'm gonna make a right here, just so you guys can see a little bit better view of the Empire. But if you guys are enjoying the stream tonight, please hit the like button and subscribe to the channel if you are new. We usually do these live streams 5 days a week, starting at 8:30 at night. So if you guys want to join us, please feel free to hit the subscribe button. That isn't my real name, since that Taco Bell saved me so many times. I've never been in here. I'm just not a big Taco Bell guy. I'm actually pretty petrified of Taco Bell, not gonna lie. I'll just give everybody a little tip if anybody is new to New York. I try to avoid going to fast food places anywhere between 28th Street and 42nd Street. That's just my tip. If you want to go anywhere else, I think it's fine, but just anywhere in this vicinity, I would definitely avoid if it was up to me. And I think the reason for that is because the amount of times I've walked this block in my years being here, and these stores are temporarily closed due to roaches or rats, it's more times than I could count. And I don't think it's that any of their fault. I think it's that, it's a very high density area, a lot of subways and trains run through here, so you're gonna have a ton of roaches and rats and things like that. So I would definitely try to steer clear of any of the fast food restaurants near Penn Station, but that's just me. War Walker says, War Walker, what's up, man? Good to see you. Yeah, Mike C says best to avoid all zip codes. Yeah, and again, that's just a little piece of insider information there. All right, everybody, we made it. This is Macy's 34th Street, Herald Square, the famous, I think this is the biggest department store in the world. And speaking of Amazon, we were covering Amazon's earnings last week. Supposedly, Macy's doesn't own this sign, and Amazon was trying to run advertising on this sign here, so they're in a little bit of a battle with Macy's. Hey, we have the one and only Solo 401. What's up, Solo? Good to see you, my friend. Just for Solo 401, we're gonna walk to the end of the block and see the Freedom Tower, the World Trade Center, because that is Solo's favorite building. Good to see you, Solo. But check out the view, everybody, of the Empire here. Absolutely beautiful. Hey, Russell is here, says, hey, Tom, hope all's well. Thank you, my friend. Everything is going great. I had a pretty restful weekend. I am ready to attack the week. I am ready to crush the beginning of August. I hope you guys are as well. One other thing I wanted to note, obviously we've been talking about the currency or the FX problems that have been hitting bottom lines and corporate earnings. So I think this piece of data is going to help us work through that a little bit. And here's what I mean. So this is the percentage. It's 29%. So 29% is the percentage of S&P 500 earnings that come from overseas and are thus exposed to a strong dollar. So why is that important? Well, as we've been covering this earnings season, as Microsoft, Amazon, Apple, pretty much any of the big companies in the S&P 500 that also has exposure and sells products and services into emerging markets or other countries, they've been taking a really, really big hit on both the top line and the bottom line due to currency fluctuations, more specifically a very, very strong US dollar. So something to keep in the back of your mind, 29% is the percentage of S&P 500 earnings that come from overseas and that are thus exposed to a strong US dollar. So even though, if we think about Alphabet, if we think about Microsoft and Apple, I thought those earnings reports were actually relatively good. I thought they were pretty strong based upon the criteria and the environment that they were up against. So could you imagine if the dollar starts to come down a little bit? That's going to alleviate so much pressure off of emerging market countries and emerging market currencies, might I add. So next earnings season could even be better should we see that dollar pull back a little bit. But once again, Tim Cook, if you guys go to my YouTube channel, if you go to the community page, on my YouTube community page, I actually posted Apple's conference call for everybody to watch for free. And what I want you to do is listen to what Tim Cook is saying, right? Tim Cook is the CEO of Apple, and look at the particular sectors of his business that he thinks are doing well, and look at the characteristics that he says that are impacting his business, and as we've been talking about on the channel almost ad nauseum for the past couple of months, is that I predicted that foreign exchange rates and a strong US dollar is really going to hit home and hammer a lot of the top and the bottom line of those multinational companies. So be apprised, look out for that. Yeah, FredX's 9.7 view. Oh, FredX, we got to give a little bit of a higher view, a higher score than that, no? Oh, let me pull off to the side. Let me see if you're right. No, yeah, that's right, 9.7. No, he's right. Yeah, he's definitely right. That's a 9.7. Apologize, FredX. You're right. That's a 9.7. Gilberto, welcome, Gilberto. Good to see you. Hopefully you're well. I think it'd be a little bit higher than a 9.7, everybody, if we walk a little bit further and get away from the light. I think right now it's probably like a 9.9 since the light is out of the way. If you guys think this view is a 9.9 or a 10, leave a like on the video. Fantastic view of the Empire State Building as we are walking down 34th Street. Hey, Dave K, so stay clear of Santander, please. It gives me nightmares. Noted. Noted. We will definitely stay clear of the Santander. I promise. Hey, Jim says my plan is to visit New York City next holiday season. Love that. Well, this holiday season we'll be out here streaming it. You know what I was just thinking about, everybody? So a little bit off topic. We haven't been to the Hudson Yards in a while. When's the last time we were at the Hudson Yards on the stream? Licia says I watched how the Empire State Building was built recently. Absolutely beautiful. Yeah. I mean, you want to talk about, you know, American just grit. Watch how the Empire State Building was built during the Great Depression. Javco says, yeah, it needs more color for a 10. All right, what about here? I'll give you guys another view from right under it. And the rain is just starting to come down here. You know, I think the rain is really supposed to come down really, really hard at like 1 or 2 in the morning. Yeah, Wendy England, you're right, says you've never done the High Line. I think we've done it once, maybe last year, but we'll have to do it. The only thing is that it closes. The High Line closes way too early, and we usually stream at 8:30. MN says, Tom, are you from Queens? I'm not. I'm from Long Island, Nassau County. But I love Queens. Love Queens. So James says the Empire State Building never gets dated either. I agree wholeheartedly with that. Dusty Cole says you got an umbrella. Not today. I'm actually rocking without an umbrella, surprisingly. That's very uncharacteristic of me. But what I want to show you guys, I want to cross the street on the other side of 5th Avenue. You know, ironically enough, as we are talking about Microsoft's earnings, LinkedIn posted its highest revenue growth for Microsoft of any quarter in Microsoft's history. And LinkedIn's corporate office is actually in the Empire State Building. Yeah, Robert says, Tom, can you show us Riverside Drive one day? You know, during my college days, I was always near Riverside Drive. Riverside was one of my favorite locations on the Upper West Side. Still is. We'll have to do a stream there. Love the Upper West. Glass of Beer 123 says, what's a better place to live, New York City or San Francisco? I'm not sure. I've never been to San Francisco, but I'm going to be biased and say New York just because I'm from here. But check out this view of the Empire, absolutely beautiful from here. Hey, Michelle Henry says, don't think I could move back with my parents. There's a reason I don't want to move back with parents. Oh, I think my chat is getting all messed up. Sometimes from time to time the chat scrolls all the way back to the top. I'm not sure why. Nirvana fans says, do you see AK often when in Florida? Yeah, I see him all the time. So my office is very close to where he is always. No, he loves it down in Florida. I love it down in Florida too. I have zero regrets. So I've always said the two places that I wanted to establish my life is New York City and Miami, Florida. For me personally, those are my two favorite cities on earth. So I want to establish business relationships there. I want to buy real estate. So absolutely no regrets at all. Absolutely none. Yeah, but the Empire's looking good from this angle. This isn't my real name. Google says, how walkable is Miami? Don't really use a car as a New Yorker. Yeah, so Miami, for me, it's very walkable. But oftentimes when you guys watch the Miami streams, you'll notice there's not many people walking the streets. Only time when you'll see a lot of people walking the streets is when you're in Brickell. But that's because everybody, and I mean literally everybody in Miami drives. But for me, it's extremely walkable. I don't have a car, I don't drive, and I get around just fine. I go to the office, I walk to all the coffee shops in the financial district where I work, and I love it. I love it. But I think just the culture down in Miami is a very driving culture. Like here in New York City, it's such a nightmare to drive that nobody really drives. Ariel says, how is life different from Miami versus New York City? That's a good question. For me personally, when I'm in New York, it's a little bit more hustle and bustle, like nose to the grindstone. And in Miami, for me, it's a little bit more laid back. Even though I'm working, it's nice to go on my lunch break and I can see dolphins jumping around in the bay. And it's 75 degrees all year round. You know, I live about 1 mile from the beach, so I can even ride my bike to the beach in the morning if I want to get a workout in. So in that respect, it's a little bit more relaxing for me. And I think that's exactly what I needed because I tend to be a workaholic. So I need to work in an environment where I can kind of chill out for a bit. So if I spend, 50% of my time in Miami, Florida, developing and fostering business relationships there, and 50% of my time in New York doing the same, I think that's probably going to put me on a pretty decent trajectory towards where I want to be. And I'm not really one to go out partying or be big into nightlife, so I don't really get sucked into that whole Miami sort of South Beach vibe. So there are locations if you just want to relax that are private, that are very quiet residential neighborhoods. So I like it. It's definitely a big change, but I like it. Hey, Anna says it's good to take a break from New York City's hustle and bustle. Energy, but you're always happy when you come back. That's how I would describe it. Oh, absolutely. I mean, I love New York City, right? I love New York City. I love Miami. I think both of them are fantastic. But I don't think I want to live 100% of my time in the city. And I'll tell you guys a quick story, might as well. We covered a lot on the stream. We got a lot of work done, so I appreciate it, guys, for hanging with me on the stream. Here's what I'll say I've noticed since I moved to Miami. And I think a lot of people, if you're born and raised in the city, or maybe you just spent a lot of time in the city, I think you're going to notice the same thing if you ever choose to live for an extended period of time somewhere else. So here's what I've noticed. Let's review. Every time friends from out of town would visit me in New York, we would walk around the city and they'd be like, oh my God, Tom, it smells horrible. It smells so bad. And I'd be like, what are you talking about? It's fine. It doesn't smell at all. Ever since I moved to Miami and I spent, 3 weeks there, a month there, whenever I come back to New York, I start to get a little bit of a headache. I'm like, oh my God, it actually does smell. And I'm not saying this to put a knock on New York, I'm just saying, if you spend time in the mountains, or in my case, by the beach where everything is clean, there's no garbage, there's no, it's a big city. The air quality is so different, like I can't even describe it to you. But you get used to it after a while. If you live in New York 24/7, 365 for years, you get used to it and you almost become oblivious, which I don't think is healthy. For me, I don't want to be breathing in, car exhaust. I don't want to be breathing in rat poison on the subways for my entire life. So I want to set up my life to be able to, maybe have some time to, breathe in the ocean air or something like that. That's one of the things that I've noticed. And again, not a knock against the city. This is just an observation I've had. And I think anybody who's watching the stream who's from New York, maybe you would agree with me, or maybe if you ever, want to live somewhere else for an extended period of time, I think you'll start to notice just the air quality is better. And I actually feel that my mood is a little bit better sometimes, just because I don't have a headache or a stuffy nose, things like that. But that's one of the main things that I've noticed. But again, that's city life, right? It's give and take. So I think this view of the Empire State Building, everybody, is the 10 out of 10 shot. Would you agree? Yeah, James says the air quality is not good in New York City. Well, in comparison to the rest of the world, New York City is fantastic, but spending my time in Sunny Isles Beach, Florida, near the water, and then if I do that for 3 weeks and come back here, I definitely notice it. But on the side of why I love New York, I'm just a very high energy person, and I love business, and I think this is the business capital of the world. So if you want to be relevant in business, if you want to try to grow a company, if you want to try to make contacts, this is the place to do it. Because by far, in my view, the most educated, the most talented people, not only from the United States, but the world, are attracted to cities like New York. And that's where I want to be as well. Yeah, photos from around New York says, although if you smell that Central Park should be a nice... Yeah, that's true, but it's even then, it's weird photos. And I thought the same thing, don't get me wrong. My brother would come visit, or friends from out of town, and I'd be like, dude, I don't know what you're talking about. It's fine. I'd be like, it smells absolutely fine here. And I remember my brother turned to me, we're at dinner, he's like, bro, that's because you're getting used to it. And I was like, nah, no way. And he was right, because my brother moved out of New York a long time ago. He's in Boston now. But yeah, he always says that every time he comes to visit. Matthias says, would you raise kids in New York City? I would. Yeah, I would. I think I would. Russell says, Tom, do you plan to co-host, probably bring more expertise and entrepreneurs in your live streaming? Maybe not in the live stream, but we will be beta testing something, everybody. So I guess I'll announce that now. I told you about it on last night's live stream. But I've been getting a lot of requests to do standalone videos. So I think we're still going to obviously do the live streams 5 days a week, but Monday through Friday, we will be trying to do a post-market wrap-up video. So at 4:30 when the markets close, I'll be doing, oh my gosh, look at all these rats. When 4:30 when the markets close, I'll be doing like a markets recap stream, covering some of the earnings, and you guys will be able to listen to it as a podcast, right? So if you only want to hear the audio without me reading any of the comments or things like that from other people or other viewers, it'll be a 15 to 20 minute video that's posted probably around 6 o'clock, depending on how long it takes me to upload the video, of essentially the things that I say on the stream, but going in a little bit more granular about the market movers for the day, the particular sectors that showed relative strength, or any earnings or news that came out. And I think we'll do that series and we'll see how it goes. If you guys like it, I'll continue doing it. If you don't like it, we'll can it, and we'll just continue to hang out every night. But I think I'm going to upload it on Apple Podcasts, so you guys will be able to listen to it wherever you listen to podcasts. I think I'm going to call it Behind the Street, and it will be a 15 to 20 minute financial podcast where you can watch it as well. It'll have all the great views in New York City, but it'll just be me, my voice, talking about finance, earnings, and doing deep dives on specific companies. Mike seems like I'll skip Mad Money to watch Tom. That's funny. I appreciate that. Yeah, just because I'm getting a lot of requests, and I think maybe it'd be kind of cool, to upload it on Apple Podcasts. So sometimes a lot of people don't like to sit through the entire 2.5-hour stream, which is cool. I just like doing it to get exercise and talk to everybody. So if people just want to check in and get the consolidated report, you could just watch a quick 15-minute podcast style. So we will be beta testing that. Yes, we will be uploading that to YouTube as well. Dave Case is better in stereo than in mic, in my opinion. I agree. The problem that we've had when we just don't use a mic is the wind noise is so egregious that nobody could really hear. But yeah, if you guys want to stay up to date on that, hit the subscribe button and leave a like on the video, and we'll definitely be beta testing some things. But we will never stop doing the live streaming. I just think it's too fun. We meet a lot of cool people. NBA Elias, that would be awesome. Looking forward to the podcast. Then I could forget the IBD podcast. Please don't forget the IBD podcast. I love investing with IBD. But appreciate it. So I'll take you guys back. I got to go back to Penn Station and the Moynihan train station. I actually have to go home now. But I'll take you guys there with me, might as well.
Right?
Dan Zhang says, Tom, have you ever considered opening a second channel for the podcast? Because it's going to be a different category of video. It might mess up the YouTube recommendations. Interesting. I never thought about that. Maybe we will. I think if I have time, I may. It's actually a really good point, Dan. I'm not sure. But Dave K, what you said, I absolutely agree. I actually don't like using the mic. It's so cumbersome with all these wires. But every time we don't use the mic, the wind noise, it sounds like, we're jumping out of a helicopter. You're right. So Bagels and Walks. This is a fantastic view here, the bridge here. You know what's interesting, everybody? If you go back in time on my channel and you look at my New Year's Eve live stream, this same truck has been parked in the same spot for 6 months. I just noticed that. Sorry to get sidetracked, but I just noticed that. So if you look at my New Year's Eve live stream, that truck is parked in the same place. Handsome Devil says, keep it simple, Tom, one channel. Appreciate it, Handsome Devil. Love the username, by the way. Felix says, what's up, Tom? Hey, Felix. Good to see you. Welcome, Felix. This isn't my real name. Says, how long is your commute from the city? It's usually right around 40 minutes. Usually right around 40 minutes. Let me see if I could show you guys the World Trade Center from here, the Freedom Tower. So if you look directly down 6th Avenue, all the way right here, this is the World Trade Center. You'll be able to see it. Robert just called 311. No, I think it's actually kind of cool. I was just surprised that it's been there. I guess you're allowed to leave it there. It's kind of cool. Hey, Russell HUQ says, appreciate your time. Thank you so much for the $10 donation. Much appreciate the support on the channel. Appreciate it. Hey, Photos from Around New York says, Walks on Wall Street, Tom. Someone pointed out on Twitter that there is a Fresh Direct truck that is also parked in one spot and acts as a transition point for food and groceries. Wow. So maybe a little bit of strategy there. I wonder if they pay the city. Kumar says, I'm coming to New York today. Awesome. I can't wait for your arrival. Smee Media, what's up? Says, I wonder if somebody is living in the truck. It's possible. You never know. Good to see you, Smee Media. Good to see you. If you guys want to connect outside of the live stream and you want to read a little bit more about the equity research I post or just my thoughts on the economy in general, if you're on Twitter, I would suggest you get on there, or if you're not, I would suggest you get on there. Follow @Walks Wall Street. I think FinTwit is a huge value proposition. There's a lot of very prominent and notable hedge fund managers, very old school Wall Street guys tend to post a lot of their stuff on Twitter. And Twitter Spaces is also fantastic too, a great resource. A lot of times you guys will see me in the spaces there on Twitter. Wow, check out all this garbage here. Jeez. It's a massive amount of garbage. Hey, Brian, says you from Chicago. Good to see you, Brian. I want to visit Chicago someday. But Russell, thank you again for the donation. Appreciate it. DN says, hello, everybody. A beautiful night to be out and about. Thank you, DN. And if you're on my Twitter page and you want to stay up to date with my newsletter, just click subscribe on the newsletter, punch in your email. And this Tuesday, we will be having another edition of the Behind the Street newsletter. We will be back to our full, regular scheduled programming on the stream. Obviously, July was just extremely busy for me, so we got a little bit off track there. But we will be back to regular scheduled programming. Yeah, War Walker says lots of plastic in the trash, too. Bagels and Walks says, wish we'd monetize trash collection here, or modernize trash collection here. Embarrassing for a world-class city. Yeah, I mean, it's different. That's another thing that's a lot different in Miami. There's not any trash at all on the streets. And you guys could see, you guys watched the live stream in Miami. Very seldom do you ever see trash bags or anything of the like on the streets. I don't know why, but hey, Ruby Falcone, good to see you. Welcome. Ruby, hope you had a fantastic weekend so far, and I wish you all the success and happiness in the new week. Ruby, always a pleasure to see you. So Matthias says, do you think last week's bear market bounce or the start of a new bull market? So, okay, we'll end the stream on this because that's actually a cool thing to talk about. So is this rally in the stock market a bear market rally, or is it the beginning of a new bull? Well, I think we're actually going to find that out this week, and here's why. I was reading an article in Barron's, and I think there was some research out from S&P Global that states the average bear market bounce of the bear market rally is the exact proportion of the rally we just experienced. So if the market starts to roll over and we break back below Tesla Taxi over there, beautiful Tesla Taxi, if we break back below the 50-day moving average, we could see a new low, which I actually hope we do see that, because my ideal scenario would be we make a new low in the market, midterm elections roll by, the Fed raises interest rates 2 more times, then after midterms, the Fed stops raising rates, they start quantitative easing, and we could start this rocket ride back to all-time highs. Because at the end of the day, earnings matter, right? Earnings matter. We've been talking about this ad nauseum. The only thing that matters in this market is earnings. And if corporate earnings are growing, if corporate earnings are growing year over year, the market generally is going to go higher. But I guess we'll find out sooner rather than later. But I'm pretty optimistic. But yeah, we'll go through that a little bit more in detail on the Behind the Street newsletter. But guys, I got to run. So I will see everybody in the next one tomorrow at 8:30. Please have a fantastic week. Be safe and don't quit. And I'll see you guys right back here tomorrow. So thank you for joining MBA Elias. Enjoy your week. Photos from around New York. Have a great week. NNB 045 Ming Foster. Appreciate it. Ruby Falcone. Houdat Dave. Estelle. Thank you so much for joining, Estelle. Good to see you. Zilch. Appreciate it. Cayenne. SME Media. Jason Francis. And to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere. You just need to know where to look. And I will see you guys right back here tomorrow.